You don't vote for them, you don't see their names on ballots, but they own your house, your job, your data, and sometimes even your politicians. They don't build anything, sell anything, or create anything. They just move money. And somehow that makes them more powerful than presidents. Because in the modern world, money doesn't just talk, it governs. Most people have heard the term hedge fund, but few really know what it means. The name sounds like something between a legal loophole and a gardening service. But behind it lies one of the most powerful ideas in modern finance, a lawless private club for the rich. Welcome to Paper Empire's history. Today we stand at that dark intersection where money, power, and history collide. And remember, nothing is ever as simple as it looks. Ordinary investment funds must follow strict rules, like cars obeying speed limits on a highway. Hedge funds, on the other hand, drive off-road at full speed. They multiply their bets by borrowing, leverage, place complex bets on future prices, derivatives, and profit even when markets crash. These funds exploded in the 1980s with the era of financial deregulation. They weren't banks, so they didn't need banking licenses. They weren't public companies, so they didn't need to be transparent. They operated in a gray zone, invisible to most regulators. If a normal investor is playing chess, hedge funds are playing poker with other people's chips at a table the public doesn't even know exists. In 1992, a fund led by George Soros bet against the British pound and defeated the Bank of England. In 1 week, he made over $1 billion. A single private investor brought a national currency to its knees. That isn't a market player, that is an empire. Then came the warning shot in 1998 with long-term capital management, LTCM. Run by Nobel Prize-winning economists, this invincible fund collapsed like dominoes during the Russian crisis. Its losses were so massive they threatened to crash global markets. The Federal Reserve had to organize a private bailout. At that moment, hedge funds learned something profound. If you are big enough, the system will save you. Risk was no longer dangerous. It was negotiable.
From that point on, they stopped just playing the markets. They started shaping them. In the 2000s, they turned into trillion-dollar institutions. Their favorite tools were leverage and derivatives, the jet fuel and dynamite of the financial world. With leverage, you can use $1 million as collateral to buy $10 million in stocks. If the price goes up 10%, your profit is 100%. But if it drops, you lose everything. High speed, high risk, powered by other people's money. And when these bets go wrong, the economy pays the price. When the American housing bubble burst in 2008, fund managers like John Paulson saw the disaster coming, but they didn't warn anyone. They built a product that would pay off when mortgages failed and short-sold it. While millions lost their homes, they made billions. The message was clear. You can bet against the American dream and win. After 2008, banks faced new regulations, but the private hedge funds escaped. They filled the void left by banks, becoming lenders, landlords, and lobbyists. They bought foreclosed homes by the neighborhood. They turned suburban houses into corporate rental portfolios. Today, in some cities, 1 in every 5 rental homes is owned by institutional investors. For the ordinary person, this means you no longer rent from a person, you rent from a spreadsheet. An algorithm in New York decides how much your rent will increase. As banks retreated, hedge funds entered a system called private credit. When your local bank won't give you a loan, a hedge fund will, but at double the interest. This is banking without banks, and it is the size of the Italian economy. Not just loans, food, energy, housing, they are everywhere. During the 2020 pandemic, they made billions as the market fell, and billions more as it recovered. When inflation hit in 2022, they pivoted to commodities, wheat, oil, and profited from scarcity. They don't just bet on the future, they create it. When they take a massive position, the market moves, policies change. Regulation has been replaced by reaction. But money is only half their power. The other half is influence. Hedge funds are Washington's biggest donors. This is called the revolving door. A regulator who writes the rules retires, joins a fund, and starts lobbying the agency they once led. The cycle ensures laws are written not to constrain power, but to stabilize it. They have even financialized disaster. With catastrophe bonds, you can now bet on the climate. If a major hurricane doesn't happen, the investor gets high interest. If it does, the money goes to damages. To them, risk is just another revenue stream. This logic extends beyond Wall Street. They don't just play markets, they own the data that drives them. Satellites tracking oil tankers, thermal sensors measuring factory output, credit card data predicting your spending. This is financial surveillance. perfectly legal and quietly immense. If traditional finance is like reading last quarter's report, hedge fund finance is like reading your mind before you act. They are the new intelligence agencies of capitalism, and most of their power is invisible. It is structural. When they own a significant portion of a country's housing stock, corporate debt, or food supply, they don't need to make threats. Their assets are leverage. Try rent control, capital flees. Regulate derivatives too tightly, liquidity dries up overnight. The system is designed to keep money moving, regardless of who suffers when it stops. And the irony is, your own retirement fund is probably part of it. Teachers, nurses, savings are invested in hedge funds for higher returns. So, public money fuels the private power that drives up housing prices. This is the hidden loop of modern finance. Hedge funds don't see themselves as villains. They say they are realists. They claim they make markets more efficient. And in some ways, they are right. They allocate capital fast. But their success relies on a fundamental truth of history. The concentration of power always accelerates until it breaks. Like the merchant guilds of Venice or the East India Company, hedge funds are the new trading companies of the modern world. Private sovereigns in a world where capital moves faster than law. They don't raise flags, they raise margins. They don't declare war, they fund both sides. They don't need to conquer nations, they buy their debt. The danger isn't that they exist, it is that they have become indispensable. If they vanished tomorrow, markets would freeze, credit would stop, governments would panic. The dependency is that deep. When asked who rules America, the answer isn't in the White House. It is in quiet offices in Connecticut, in risk models that decide the fate of nations before breakfast. Empires used to conquer land. Now they conquer liquidity. We didn't lose democracy to corruption. We traded it piece by piece for efficiency, until control no longer needed permission. History doesn't repeat, but the pattern is familiar. A new ruling class emerging not through politics, but through power over debt, data, and desire. And every empire built on leverage eventually learns the same lesson. You can't short the system forever.
If what I shared today helped you see the world from a different perspective, don't forget to subscribe. Because history always has an answer. You just need to look from the right angle.